Example, if you bought it here, your stop would be here. That way, if it does go against you, no harm, no foul. But we want it to ride back up to this channel to get our sell, right? So here's our protection during market hours. You are protected with your stop, right? Which we just don't get in pre-market. This is why if you're going to do it pre-market, just do it with smaller dollar amounts. And then you would do the same thing up here. If we were shorting it to the downside on the bounce of top of resistance, meaning we want it to go back down, well, now our stop would be right here, right? Just above it. So same thing. If we have our stop right here, right? And it does decide to finally make that one run up, well, no harm, no foul. We've got our stop. It's either long candle through, I'm out, or a small candle with another candle, right? Which is confirmation. Because if we have a long candle through, remember, any long candle that pops through, it has a long way to come back. That means I don't want to be in that. Otherwise, what'll happen is a candle will break through and then it'll just come right back up, right? Those one little pop throughs where a little wick comes through doesn't phase me one bit, and it never should for any of you. So when I say a break and hold, which is where you want to stop, your stop needs to be a break and hold. So if you guys ever notice when I put in my stop, you don't see me drawing a line right here and I say stop, right? You'll never see me put it right at the line. That's not where the stop goes. Your stop needs to go below it because it could candle through, nothing, buy, right?